Hi, my name is Shane Williams. I'm President and CEO of West Red Lake Gold Mines. West Red Lake is a development story based in the Red Lake region of Ontario, Canada. We're restarting the Madsen Gold project in Ontario, in the Red Lake region.
And good to see you, Shane. Look, and I appreciate you coming on the show. We're going to sort of get a kind of quick catch up from you because I'm hoping to see you actually in Beaver Creek face to face. We'll probably have a bit more of a detailed conversation, but catch up as to where you are. You, like I say, it's kind of a reboot. It's pure gold. West Red Lake is a pure gold reboot, as it were. Tell us what you've been focused on since we last spoke.
Yeah, it's been a while since we last spoke, and look, there's been a lot going on, and since then we've really started to ramp up. Like we've 150 people on site now at the moment, so we've really reset the project. We've really started to get drilling going. We've 3 drills now on site at the moment. If you remember, part of the challenge with the previous operator was lack of that drilling, that definition drilling, and really understanding of the ore body. So we've really tackled that now, and we've 3 development crews on the ground. Pure Gold never really got the opportunity to drill deeply on the ground and get into the guts of the system, really. So that's where we've really focused. We've done about 1,500 meters of underground development, using that to set up drill stations on the ground. So that really into the guts of the ore body, and this very, very high definition drilling. Like I'm talking 6 to 7 meter spacings. We've done over 50,000 meters of drilling, and we've probably another 50,000 to do. So total 100,000 meters. And that's not exploration drilling. That's not, growing the resource or anything. That's more definition. So we can understand the ore body and understand the detail and build a solid mine plan around it.
Right, to give you and I guess your shareholders certainty over the next phase of the project.
Yeah.
Right. Can I just talk about the let's understand what some people may have some legacy issues of thinking back to what went before. You're getting after this by doing a lot more drilling, infill drilling. You're not trying to grow the resources. You're giving yourself certainty over what's under there and therefore how to come at it. So in terms of months, how quickly can you move through that? Because I think there's a little bit of conversation in the market about, well, perhaps there needs to be more infill drilling. Some of the data presented in the market suggested that there's data missing. Is there?
No, look, we've been drilling since October of last year in Madsen. So we're coming in, and by the time we, plan our relaunch, we'll have over nearly a year and a half of drilling done. So, lots of drilling, very, very, very high definition spacing drilling. And these are short fan-based drilling. This is getting ready for mine design. This is not, as you said, we're not trying to grow the resource and show even another 1 million ounces. We know that's there, but we really need to get the ore body correctly. So, this is high definition drilling. But, part of it is that things are moving as we go, because we have a mine team, we've technical services team. So as we're drilling, there was a original resource there, as your viewers and listeners would know, from SRK and overall MRE in place. But as we're doing that high definition drilling, that's moving and being updated as we go. So some of the, there was a bit of discussions around resource. Have we enough? Are we hitting where we should be hitting? That's a very fluid ongoing process, because as we get to drilling, we update that resource model, which was originally the SRK model. We reset it up, and then we use that model for refocusing the drilling. So it's constantly moving. It's constantly being updated and focused on drilling down into that definition.
Right. And what are we chasing here? Remind us of, what the MRE told us and what you're trying to do with that in terms of that data.
So at a very high level, the MRE gives a high level overview of where the gold is. Where the gold is. Red Lake is complex. The geology of Red Lake is complex. There's high grade veins, but they pinch and swell. They move a lot. It's not easy. It's not like there's broad lenses of gold, effectively. So there's broad lenses of mineralization, but within them there's high grade veins. Some of them can be 2 meters wide. Some of them can be 1 meter wide. So the MRE talks about this this lens of gold. But then you got to get in and do that definition drilling to understand how it follows the gold. It's very, very definition focused drilling. And so once you get the first pass, the way you do it is you do the first pass of drilling, you update your model, you go back a second time, you do your second pass of drilling, and sometimes you go back and do your third pass of drilling on the same lens, if I talk about. So, you get a very, very high grade understanding of where that lens is.
And talk to me about this efficiency that you're chasing here, because obviously you're going in first pass, second pass, third pass. It doesn't sound like it's sort of efficient drilling, but the efficiencies come later by making sure that you're when you sort of designing the mine build out, etc., and how you go about chasing these pinching and swelling veins. How does that efficiency work further down the line with this increased data up front?
Yeah. So if you don't spend it on the drilling, you'll end up in trouble in these systems, really. And that's part of the issue. When you're doing the mine design, you don't have the flexibility of a drill. You can't follow these ore shoots around the place. Mining doesn't work like that. You need to follow it. So by getting the level of definition drilling, it allows you to plan much better your mining. Where your ore shoots are, how you're going to attack them, where your definition is, etc. And if you don't do that level of drilling, you can lose control of the ore body. I'm talking about you go from A to B, there can be 10 meters between it, but there can be 3 ore shoots between that. So if you have a hole between one at 10 meters apart, you think, it goes from A to B, very straight and linear. And so you plan your mine like that, and it's not like that. It can go up and down and spin a little bit. So without that level of definition drilling, you can actually lose control of the ore body. And that was a little bit part of the problem with the previous operator. They hadn't got that definition drilling. Their understanding of how that ore body worked on the ground was a little bit different, and it needed that level. So yes, it's a lot of money to drill, but it pays for itself in spades later on as we go into mine. And also the approach to mining. There's lots of different methods of mining. And so, if you try to mine this at big bulk tonnages and go in big stopes and everything, this is not the ore body for that, for sure. This is definitely not the ore body for that.
Right.
This
okay.
is narrow vein mining.
Right, and again, I guess it's nothing new, but you've got to understand precisely how you're going to get after it in the most efficient way. That is understood, and as the data comes through, you'll tell us more, and you'll know more, and you'll tell us more. Just in terms of remind me in terms of where you were with money. Like you picked this thing up cheap, $6 million, some stock and an NSR in there. So the real value was really front loaded in the sense of how cheap you picked up quite a good high grade project which had a few $100 million spent on it, etc. But the drilling since October, how much have you spent to date? How much money have you got left to spend on this thing? Give me a sense of where the balance sheet looks like.
Yeah, look, again, a lot of it is that we picked up this asset. Everybody really. There was $350 million spent on this asset and that. So it was a lot of money spent. And we've actually spent a lot more money. We've raised $100 million, really, So we have 40 million, just over 40 million Canadian in our cash balance at the moment. And everybody, a little bit back to understanding. Everybody says, oh, you have an asset. It's ready to go. How come you're spending all this money? What are you doing? And so, part of it is that definition. We've decided to step back, de-risk it, do a lot of that work that should have been done. This asset was in production, so it's hard for investors to understand. It was in production. Now you've spent another 100 million on those, and we need more money to go. So, we need about another 50 to 70 million Canadian dollars to put this back into production. That's the sort of scale. So when you add that up, all those monies up, that's another altogether, maybe another 150 million altogether on top of what was bought. So like $500 million total with the money that was in there, what we're going to spend to get it back into production, I would say.
Right. I think most people would be discounting the first 350 million because you didn't have to spend that. You're the beneficiary of most of that money. But it's really a case of trying to understand what type of business would they be investing into. This, like I said at the beginning, this is a kind of reboot. Here you've got high grade asset with, how many million ounces have we got on the resource?
There's 1.7 million ounces of indicated, and then there's another roughly 300,000 of infer. So about 2 million ounces, just over 2 million ounces at 7 grams, really. It's so that's
Right.
so that's scale.
So I guess people's expectation is, well, this is actually what comes to that in a second. Again, focused on what you're trying to do, because you're having to, it's like I say, this reboot is great, but some of the questions still out there in the marketplace is like, can these guys do what the other guys couldn't, and can they do that efficiently? So you said already, the drilling is not about, it's infill drilling. It's not about increasing the resource. 2 million ounces in normal circumstances, say, well, in today's market, that's not big enough. But you've got the grade there. You've also got gold price working in your favor. I mean, how are you kind of viewing and playing the market from in terms of the conversations you're having in market?
Yeah, look, the reason we know the gold is there. Look, Matt, these systems in Red Lake go very, very deep. A lot, you'll know that from other viewers and listeners will know in Red Lake, there's some very, very deep mines operating in the region, in Timmins, in the Abitibi, very similar sort of greenstone system. So Evolution is our neighbor. They're down at 3,000 meters mining. There's a lot of gold still left here. The problem is to get there, you need to do the drilling. You need to get there. You need to drill down deeper, but you got to start. So our focus is on this definition drilling.
Okay. I hear what you're saying, and I know you keep coming back to that. But again, people are a little bit excited about the gold price. It seems to be so quite sticky at 2,500 at the moment, and expectation is that margins for producers will therefore be better. Costs haven't completely stopped, arrested. I think cost of employees continues to rise, competition rises, etc. But people expect producers or near-term producers, which potentially we're talking about with you, to do quite well in an environment like this. It still feels quite cheap in the sense of not just how much you picked up for it, not how much drilling you've done, and maybe that's an additional 50 million that you're putting out there. How are institutional investors reacting to how you're kind of putting together the kind of financial component of the project?
Yeah, look, we're beginning to get some traction. Look, the problem with this, we've raised a lot of equity today. We've raised a lot of equity for the company that was ready to go effectively, as you say. So, and one of the reasons we did that from a capital structure point of view, Matt, was, debt was the issue that kind of was part of the problem on the overall project. With their capital structure was not ideal. So they took on a lot of debt early in the project, So I was trying to avoid that as much as possible. Unfortunately, we have to do it through equity, to advance the project. So we're getting to a point now as we look going forward to be looking at other alternatives to finish that last piece of capital. My plan is not to do a lot more equity to finish the project. That's kind of, but I needed to have a plan that we believe in, we de-risked, we're really sure of it before we look at things. We're looking at things like a royalty, potentially a stream. It's not a large amount. It's 50 million Canadian. It's not a large amount of money to get there. And we are looking at some alternatives to put that in place. So investors like that because we've raised a lot of equity. They're saying, okay, where are we going now? And how are we doing this? And they're supportive of that going forward because we have a good plan in place now.
It's a good plan. And I just want to talk about that plan slightly further because again, coming back to this thought of just getting this infill drilling, giving yourself certainty, maybe giving the market certainty over what is known, and we'll worry about the blue sky exploration further down the line when cash is flowing. So to get this cash flowing, clearly there's a lot of infrastructure there already. This thing was in production after all. How much do you think you'll be able to process initially with that kind of restart with using the existing equipment before you look to kind of scale up? And what does that mean in terms of cash flow potentially if you can get that right?
Well, look again. Given the history of it, it's very important for us to just get what we have right. We're not going to talk about scaling up. There is a lot of potential to scale up, but again, I can't go out there and say, a lot of companies go out and say, we're going to start and we're going to grow by 5 times X over the next 5 years. For us, it's about what we have, getting that right, getting the 800 tons a day is sort of the mill permitted for. It can go much bigger, but we want to get that 800 tons a day consistently producing gold. It would be around 60 to 70,000 ounces a year. Not a big project, not a big huge project. But I think for us, it's more important to get that running, set a base, and then talk about growing. I think that's very important for the market for us to come out and show that.
For sure, and I appreciate the kind of the cautious nature of the commentary from you for sure, especially with given some of the things that are going on in the market, have gone in the market in the last 6 months with others. The mill itself, 800 today, expansion capacity up to potentially 1,500. That there'll be a capital cost for that, so that's probably not on the list of things to do day one. But are things like ore sorters and other kinds of efficiency drives on the table for you? And so, what are you looking at?
Well, we are looking at, we have, again, it goes back to that infrastructure we have on place. Actually, we have a shaft on the project. We have a 1,200 meter shaft on the project, which in Canada is the key to these deep deposits. Today, a lot of companies have put in a new shaft. It's $400 or $500 million to put in a shaft. So the next phase of that expansion would be getting the shaft up and running down the road, year 3, year 4, as we get down deeper. So that's a real efficiency driver versus trucking the material versus the shaft. It's $20 a ton to truck it. It's $4 a ton to skip it in the shaft. So, they're real game changers. But again, they're down the road a little bit, they're down the road. But again, we have a great base to work from. There's no such thing as we need huge capital infrastructure, huge expansions, doubling of capital infrastructure, new mill. None of that is needed. It's tweaks on the existing base, really. For me, that's key. It's tweaks on the existing base. We're putting in, we have a tailings dam there as an example to give you with a permit in place. We're putting a small lift on the tailings dam now. It's costing us $1 million to put it on. But that gives us a 10-year runway of tailings for the next 10 years. So there'll be no ongoing lifts or nothing like that. They're the sort of values that are already inherent in the project, really.
Right. Okay. And tell me, you sort of referenced this in the sense that the problems with the kind of previous setup was more about balance sheet, cost of money, and that kind of whole financing, and perhaps rushing into the unknown. From what you've seen and what you're doing at the moment, are you seeing any issues with the ore body, the metallurgy, and the kind of the physical aspect of what you've got?
And I just come back a little bit. I'll answer that in a different way. That this mine was mined in the old days. The old timers mined this mine sometimes, man, and we're actually finding that. And their average grade was 9 grams. They pulled 1.5 million ounces for 9 grams. And we're finding that as we're doing the work and doing the detail, the level of drilling, we're actually coming back to that narrow vein mining sort of approach. And that thing, we're actually finding better in the resources. We're actually finding higher grade because of that level of definition. The tons and the grade are actually going up from that level of definition. There was a lot of material left behind. And we have found some new areas. Some of our recent drilling we focused on is called this North Austin area. We've mentioned in press release. That's a whole new area, actually. That's a whole new area in the ore body that was known by Pure Gold, but we've gone in there and expanded it. So there's a lot of upside here that when we do the work and take your time, there's a lot of upside here we're finding by doing that work.
Okay. And like I said, we're going to have a better conversation, I think, when we see MP Recreate. It was like kind of like those live conversations here. But I guess what I'm feeling from this is there's no arm waving yet, despite the 2,500 plus gold price from you. No arm waving, despite the sort of M&A we see out there. But you've got to be conscious of that.
Yeah, look, there is a bit of that. Look, there's definitely no arm waving for me. I'm not that kind of arm waver for sure. But there is a lot of interest in the gold sector now. Look, I find we're getting calls out of the blue now as people are beginning to get into the space and look for stories. And I think when I present the story and people understand that there's a bit of interpretation at first because of the history, but when I present the story, they go, oh, that's interesting. And they start to get more involved, and they're looking for restarts because, as you well know, some exploration stories can be 10 years to build a mine today. And with gold moving in the next number of years, they want a stories that can get back into production. So yes, we are getting a lot more interest in those, particularly high-grade stories in Ontario that are close to production. That is beginning to resonate with the market now.
Right. Okay. Well, I think the market's getting used to hearing this West Red Lake story now, and the way you're going about it, I'm particularly encouraged by that for sure. Shane, appreciate your time today. Look forward to seeing you in a couple of weeks up the mountains at Beaver Creek. See you there.
Excellent. Thank you very much. See you there, Matt.